Ladies and gentlemen, good day and welcome to Q3 FY24 earnings conference call of Sejal Glass Limited, hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Please note this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Ms. Vaishnavi Ambokar from Kiran Advisors. Thank you, and over to you.
Thank you. On behalf of Kiran Advisor, I welcome you all to the conference call of Sejal Glass Limited. From management side, we have Mr. Amrut Kada, Promoter, and Mr. Chandresh Harambiya, Chief Financial Officer. Now I hand over the call to Mr. Amrut Kada, Promoter. Over to you, sir.
Good afternoon, everyone. Welcome to the Q3 and 9 months for the financial year 24 results conference call of Sejal Glass Limited. I am thrilled to share the outstanding performance of our company in the architectural glass industry. Prior to initiating our financial analysis, I would like to present a comprehensive overview of our esteemed company. Sejal Glass Limited is primarily dedicated to the business of value addition of plate glass and glass products like architectural glass and other interior glass products. Since our inception in 2001, we have emerged as a transformative force in the global landscape. Headquartered in Mumbai, Maharashtra, we specialize in manufacturing and distributing a diverse range of high-quality architectural glasses. Our commitment to superior quality has positions us as a premier architectural glass manufacturer within India. In addition to our corporate headquarters, Sejal Glass operates a state-of-the-art plant in Silvassa and in UAE, Ras Al Khaimah. This facility executes cutting, grinding, fabrication, tempering, insulating and laminated process, delivering the final product. About the financial highlights, moving on the financial highlights for this quarter, we are pleased to highlight our strong and sustained growth. Quarter 3 for 24 was remarkable, with our total income surging to rupees 47.39 crore on the consolidated basis, reflecting a substantial growth year-on-year increase of 305.91%. And our EBITDA reached to 6.19 crore, a remarkable growth of 464.08%, with an EBITDA margin of 13.07%. The net profit soared to 1.02 crore, marking a significant year-on-year change of 162.03%, and our EPS rose to 1 rupees, a growth of 163.16%. Zooming out to the first 9 months of 24, our total income reached 114.56 crore on consolidated basis, representing an impressive year-on-year increase of 233.49%, and EBITDA for this period stood at 15.46 crore, with a robust EBITDA margin of 13.50% average. Net profit recorded a remarkable growth to a 2.66 crore and EPS rose to 2.95 rupees. Both quarter 3 and the first 9 months of FY24 delivered exceptional financial performance. Revenue surged, margins expanded, and profitability soared. Our strategic cost control and market strength fulfilled this success. Our commitment to surpass global quality standard and customer satisfaction has translated into a remarkable financial success. With a strong revenue growth, expanded margins, and improved profitability, Sejal Glass reach extend far beyond India. With our product reaching numerous countries, we have been a beacon of excellence in the architectural glass industry, and our commitment to quality has been recognized globally. In conclusion, Sejal Glass stands tall as a premier architectural glass manufacturer, delivering superior quality products and maintaining a formidable presence in both domestic and international market, and establishing its brand in the segment. I express my gratitude to our dedicated team and our shareholders for their unwavering support, which has been instrumental in our success. We are highly optimistic about the promising growth trajectory ahead, fueled by the escalating demand for architectural glass globally. I extend my sincere appreciation to our dedicated team and loyal shareholders for occupying us to the remarkable journey of growth. Our current standing is a testament to your unwavering support and confidence in Sejal Glass Limited. With this brief update, I am happy to take a question from you all. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Dhruv Mukesh Bajaj from Smart Sync Investment Advisory Services. Please go ahead.
Yes, sir.
Firstly, sir, congratulations on a good set of numbers and thank you so much for doing this call. So I just wanted to understand that can you please give us a brief about the management team? As promoters of Aarti Group have a major stake, however, the CEO of the erstwhile entity is leading and the business has actually turned around in a brilliant manner. So firstly, what went wrong that we had to go to NCLT and what's the current ownership status like?
In the current ownership status, the majority stakes remains with the Aarti Group, promoter Mr. Chandrakant Gogri, and other is Mr. Surjit Chheda. So both are now at 80% of the stake and 20% is with the public. And being a erstwhile promoter, we have a management agreement to support the company for next 3 to 4 years. And being this industry was on MSME, some of the the process, technology, and the market control or market experience was with us. So the new management has discussed with us and given us the responsibility to lead the organizations, and not only by a earthwise promoter, but also we have other professional teams in all area. Like we have on the finance side, we have a CFO, then we have a sales and marketing head, national head, and we have a production manager, then we have a HR team, HR head, we have a production head at the Selbas factory, we have also an executive director team at UAE, then the production head, marketing head, then export manager, then procurement head, followed by the IT head, and also the compliance and legal head, and he's also the vice president operations. So we have a very dedicated and committed professional team who see all the day-to-day affairs, and strategically in guiding and mentoring I am involved myself, and also the other all promoters who give the time-to-time strategic advice.
So this is very helpful. Thank you so much. And sir, can you please provide some clarity on the ownership structure of Sejal Glass's UAE business? Because somewhere I read that Delhi Road Lines had a major stake in that venture, but another disclosure showed that we own 99% of that venture.
Initially, there was a certain, criteria of that foreign investment, which was in the process, and that time the Delhi Airlines was the stakeholders. Now, from May 23, 99% the Sejal Glass is the owner. So 99 this thing is a Sejal Glass subsidiary, and remaining 1% also we are in process. So within 1 or 2 months that process is over, so it will be 100% subsidiary of Sejal Glass India.
Got it. So that is very helpful. And sir, can you?
1% is also belongs to the promoter company.
Got it, sir. Got it. That makes sense.
But there is no outside interest other than the Sejal Glass and promoter.
Right. So I just wanted to understand that what is the margin profile that we should look at for this company and the revenue potential from both UAE as well as Indian plants separately. Since this is the first call, so if you can provide us some clarity regarding that.
For the going forward, you are saying, or?
Yes, sir. Sir, the analyzed sales potential that we have from this particular plants, both UAE as well as India, the margin profile that one should ideally look for in this type of business, since the margins have expanded a lot in the last 1 year. So what should we look at going forward?
I will hand over to our CFO, Mr. Chandresh Rambia. So he will give you the details on the figures and capacity.
Yeah, good afternoon. So in Sejal India, the EBITDA margin is in the range of 11% as of for the 9 months ended. And for UAE, the EBITDA margins are a little better. at 14% EBITDA margin for the 9 months ended.
Got it. So I just wanted to understand that with the current capacity that we have, so what is the ideally revenue potential that one can expect from this capacity, provided it is working at full capacity? And if they are able to clock full capacity, then going forward, what can be the margins that one can expect from this business? Since we saw the competitor Sejal Glass, it has a margin profile of around 23 to 30% in the same glass segment. So I was just trying to understand from that angle, that can we clock that type of margin profile, or 15% is a reasonable number that one should look at?
Sir, I think I will make you correct. We are, of course, a peer, Sejal Glass, but their main focus, they are in automobile. They control about 90% market in the automobile, which is a standard product, and they are in the float glass manufacturing.
Right.
We are not in both the sectors. We are in the architectural glass. So we are in the building glass. So here the EBITDA margin is a difference.
Got it. So what is the cyclicality element in this type of industry? So there are stable margins in the glass segment, float glass. So from what I understand, this is a commodity type of product, right? We don't have a particular brand through which we sell this product. Or if you can just give us some understanding regarding the industry, that will be very helpful, sir.
A commodity product, yes, we can have a one or two product which is commodity, but actually it is a concept selling some of our product, and we are working with the architect and developers as a doctor when the project is under the design stage. So we suggest that what kind of glass is required to control the sound, to control the sunlight in the building, on the safety parameter, and suppose the building is nearby airport or railway station, so outside sound dB is very high and inside it should be maintained 80 or 81, then we suggest a product. At the same time, India has a different natural climate. So Simla we offer a different product, whereas in Kutch, Bhuj we offer a different product because heat is high. So to control the heat, we have a different product. To control the sound, we have a different product. Then it can be fueled by a safety parameter. For the safety, we have a different product. So particularly on looking to the European standards, where sound, good living standard, aesthetical look of the building, enveloping the building with a good color. Like for you, it's a blue, but for us, it's a blue. We have a 20 colors, different blue, and so that way we offer the product to the architect. Then it is specified by the facade consultant. Then it is chosen by the developer. And then it's specified in the tender that this is the product what needs for this building. And that's how we work as a solution provider. That's the main. And secondly, some of the commodity product or some of the industrial product which we serve in industrial market like furniture industry, Godrej, Nilkamal, then some of this industrial luminaires makers, lift industry, that front glass in the lift door we are supplying, and that helps this weighing machine we are giving, and we are also discussing with some of the OEM who makes the photocopier machine like Canon and others. So that's the market where we are.
Got it, sir. So if I understand correctly, we are basically selling it to architects, and the architects are buying that for the building.
No. We sell to developer or the facade manufacturing company, fabricator.
Got it, sir. Got it. That is very helpful. And sir, if I can just squeeze in another question.
These are the specifier or they propose the developer that you use this product.
Okay.
We are from last 30 years in this industry. We are pioneering some of the product in India. We have introduced some of the product first time in India.
Got it, so that is very helpful. And sir, I wanted to understand that we tried to do a QIP sometime in 2022-23. However, it will be disclosed that it was scrapped.
No, 1 minute. I will give you one more thing. In this segment, we are the only brand in India or global, we can say. Okay. There is no other, architectural glass manufacturer that have created that brand. So Sejal Glass is well-recognized brand in a flat glass industry, particularly in architectural glass. If anybody talk about the brand, they talk Saint-Gobain, Asahi, Guardian, then it's a Sejal Glass in India. So that brand awareness and brand, is we command.
Definitely, sir. Definitely. So I was just trying to understand that basically we tried to do a QIP in 2022-23. However, we disclosed that it was scrapped due to lack of interest from market participants. Correct. So I couldn't understand that what went wrong as RC Group was backing this business, and we are since 30 years established, and we were raising only 35 crores during that time.
So see, there is any promoter who are well established corporate, they have always interest in the new business, number one. Number two, some of the investor or the big corporate is also, philanthropic, or sometimes they also look at a corporate social responsibility and try to turn around the company where a lot of employees are, working and there is an established brand. But due to some of financial problem or due to other problems, company are getting in a financial trouble, then this kind of corporate or this minded promoters are saving the company.
No, sir. I am just trying to understand it. We actually were trying to raise funds through QIP route, but
So
that got
we cannot say that it is not happened. We opened the QIP at the time when our Dubai acquisition was in process, and that time, investor has a certain doubts that, this acquisition will go clear or not, then Dubai market will perform well or not. So then, we have also not pursued so much to, give any kind of different commitment. And then promoter itself has put the money later on after 15 days. And we completed our acquisitions. And now company is, after 2 quarters, that our UAE operation is a profit.
Definitely, sir. I was just trying to understand that only. So we got that funds from Aarti Group, right? In the form of borrowings.
Yes.
So what is the cost of debt that we got from Aarti Group and the repayment cycle, if you can highlight?
So it is 8.8 and 9%.
Okay. And the repayment cycle?
It's a 3 years and 4 years, long term.
Oh. And we don't have any other fundraise, right? Because we only wanted funds for acquisition. Or do we have something in line going forward?
Not now. Except working capital, we don't have any for such thing.
Okay, sir. Thank you. I will join back with you.
Thank you. The next question is from the line of Jignesh Vaita from Jiva Capital. Please go ahead.
Yes, Mr. Mehta.
Yeah. So, sir, I wanted to understand, considering our very good growth in FY24, what kind of CAGR growth we are looking for next 2 to 3 years? So, will we continue to report more than 50% every year?
I will just, give you the forward projections. For the Q4, consolidated, we will be around 55 to 60 crore for the Q4.
Okay.
Okay. And for financial year FY25, India operations will be around 80 to 85, and Dubai will be around 200 to 225.
Okay. Okay, Dubai would be such bigger.
Yeah, because we have a large capacity there, and now as on today, we are in the top 4 in the UAE. And yet we have not started certain countries in Africa. Right now we are serving only 12 or 13 countries, UAE and some of the GCC countries.
Okay. So accordingly, sir, our EBITDA margin, if our this UAE plant continues to do well, so our EBITDA margin should maybe cross more than 12 to 13% on a long-term sustainable basis.
So we are targeting next year, our EBITDA will be in range of 15 to 16%. Consolidated.
Okay. So, sir, this our investment that we have done in UAE, so FY25 we will peak out, or so we will need to make more investment?
No, not required. Little bit of capex for the re-engineering and some working capital.
Okay. So with this re-engineering capital, we would be able to maybe more than double or maybe double our UAE operation?
Yeah, already capacity is there. When we acquired based on the capacity that, yes, this is the capacity. And right now we are, quarter on quarter, increasing the capacity. Some of the lines, yes, yet we have not started, like tempering production, we have not started yet. Second line and third line. We are working on one line. At the same time, lamination will also start in this quarter.
Okay. So,
and also we are not yet we are going on aggressive mode in the UAE market. Now, there was a certain criteria of, debt coverage, like, sundry debtors. Now, every customer will be insured because there is a certain rules, UAE, that if you operate 1 year, then insurance takes insurance of our customers.
Okay.
And some of the big customers who are established, but they have a different requirement of credit terms, which we have not touched, which gradually we start touching everyone.
So, going ahead, what will be our working capital cycle?
Working capital cycle average 90 days, 90 to 92 days.
In UAE also?
Yeah.
Okay. Sir, in this industry, if we start using all the lines, and what will be the maximum asset turnover? Like if we have assets of 100 crores, what is the peak that we can reach?
Peak turnover will be around 300 and 320 crores. 3 times of the investment.
So you are okay. So you are talking of UAE operation.
UAE operation. UAE as well as India also, if you see that way, we will be crossing 80-85 crore. So
yeah,
approximately 3 times from my investment.
So broadly, we can touch on a long-term basis without much capex. We can touch 500 crores.
Both together, 400 plus.
Yeah, 400 plus. Okay. And sir, what is our strategy to reduce this promoter holding to less than 75%? I think because there is some timeline after acquisition by the new promoters. So what is our strategy in this?
As per LODR, we have to keep the public holding at 25%. So already 20% has been diluted in the public. So further 5% is still pending, which will be done in due course. We have certain timelines to complete that as per our NCLT order. We are in line.
I think it is 18 months timeline. So I think the timeline is nearing.
So total to reduce to 25%, it was 36. There was a staggered requirement for reduction. So earlier was 10% within 18 months, and then after like that.
So still we have at least 1 year to do this.
Yeah, we have timeline to already 20% been reduced. Now only 5% is remaining, so that we are working on it.
And sir, this is infusion by RT Group for UAE acquisition. So you mentioned this repayment period of 4 years of the entire loan.
So promoter funding is there. So 3 to 4 years, that's what we are targeting. Maybe if we get some other avenues of the funding, we can repay them early.
Okay. And sir, we would focus only on our kind of glasses like architectural glass, or any plans of going into in UAE in some other areas like solar glass or anything else?
So that's a different product altogether.
Okay, so we are not touching any of that.
Right now, we are not looking to that up to FY25. Our next year full focus is to consolidate this capacity and, giving a more value addition to this product.
Okay.
We have, 1 or 2, 3 products are under R&D for architectural application.
Okay.
Yeah. So we are focusing on that, and we have to first reach our capacity utilization to 90 to 100%.
Right. Thank you.
Thank you. We have our next question from the line of Shikhar Mundra from Weave Yog Commercial Limited. Please go ahead.
Hi, sir. So what is the capacity in India and what is the capacity in UAE currently?
Capacity in India and capacity in UAE, I will give you. We have with the product.
I will explain you. See, basically the capacity can be defined in the product segment actually. We are into 3 category of product mainly. That is, one is IG glass, insulated glass, then laminate glass, and the toughened glass. So these are the product altogether are sellable in each segment. So the India capacity for our IG production is around 180,000 square meter per annum. So the laminate glass is 108,000 square meter per annum, and that is toughened glass is 780,000 square meters. These are the production capacity in India.
Right.
As well as in UAE, the IG glass is 6 lakhs square meter per annum. Laminate glass is 150,000 square meter per annum, and the toughened glass is 21 lakh square meter per annum.
Okay. Okay, got it. And currently, how much are you utilizing in and are these capacities fungible?
Sorry?
Are they fungible? I mean, insulated laminate, if the, let's say, the demand for particular insulated is higher, can we convert some of the laminate?
So we can't shuffling off. The three different. So for actually speaking, the laminate and IG are many of the times IG and laminate glass requires a toughened glass by default. So toughened glass is the first process which can be utilized in IG and laminate, and it can be sold as a product itself.
Okay. Okay. Right.
Any point of time, my toughened capacity will be more in production terms.
Sorry, I missed that. Right. Okay. And in terms of realizations, what are the realizations for each category right now?
Sorry?
The realizations for each category?
Realization? Again, different. It's all the different. So the toughened will be the lowest in per square meter realization. IG and laminate will be highest in terms of per square meter realization. The toughened will be around 1,000 rupees per square meter for 6 mm glass. And similarly for laminate, it will be around 3,200 rupees per square meter.
Okay. Got it.
6 mm basis. So it depends on the thickness again. Suppose 6 mm this, then 8, 10, 12, 4. So it depends on the thickness of the glass, what you are using.
Right. And what markets are we catering from the UAE plant? Which markets are we catering to?
We are right now catering UAE, 7 states, at Dubai, Sharjah, Abu Dhabi, Ajman, Ras Al Khaimah. Then we are GCC, Qatar, Bahrain, Oman, and certain 1 or 2 customers going in Pakistan. Then some 3 customers in Africa right now we have.
All right. And from the India plant, we are catering to the Indian market only?
We are mostly right now 75 to 80% in the West India, and particularly Mumbai, Pune, and little part of that Vapi, Daman, Valsad, Surat.
All right. Perfect. And how big is this market size in India currently? And what kind of market is it? Like, how much is the organized market share? How much is unorganized? How many players? So can you give me a flavor of the market in India, sir?
One of that we are also, in process of survey to this, but I will categorize like that. If you look at the before 15 year or 10 year, the developer or real estate industry, it was unorganized. But after the regime of new government and with the introduction of the RERA, now all the top corporate in India are the developers. From Reliance to Adani to Godrej, Tata, Imami, everybody, then Sapuji Palanji, L&T, that is all are in the industry. Certain developer are listed also. And with the RERA and the ease out of the real estate approval process, now industry is getting organized. Projects are mostly now from last 3 to 4 years, projects are getting delivered on time. So the glass is the product, it is installed last in the building. So previously it was, lot of being the customer are unorganized, industry was little bit unorganized. Now the customer is also becoming organized, our industry is also becoming organized and fueled by the DLF in Delhi, then Brigade in Bangalore, Ishkon in Ahmedabad, or here in Oberoi, Godrej, Prestige, or every one developer. So industry is getting organized. So likewise, us, there is a 5 to 6 players in India who are organized. But
Okay.
Sejal has a different outlook and different organization. First, we as a listed, so there is no listed peer in this industry. Little bit of